So when it comes to being a beginner in the stock market, you are probably extremely overwhelmed with the amount of information you can access for free online, aka with YouTube. You have got tons of different strategies, indicators, chart patterns, candlestick patterns, and the list goes on. So my job at the Peachy Investor is just to simplify all of these concepts for you guys and give you the need to know basics to get started and create your foundation for learning how to trade. I think that's really important. A lot of beginner investors and traders do not have the foundation, and so when you go to learn these advanced concepts, you are just lost in the sauce. So we're going to cover a very basic beginner-friendly trading strategy using trend lines, and to kick it off, we're going to first just go over what trend lines are in case you are just extremely new to this all. Now, if you're not new to trend lines, stick around because I do have a few tips and tricks on how I personally still use them in my market analysis and how you can avoid things like fake outs. The basic definition of drawing trend lines correctly would be uptrend lines. You're connecting at least two or more higher lows, aka swing lows. The more points of contact, the stronger the trend line. Downtrend lines, you're connecting at least two or more lower highs, aka swing highs. So looking at this price action right here, you have got a swing high, a swing low, a swing high, a swing low. So what you're doing with trend lines is just connecting these swing highs and these swing lows to determine if we are in an uptrend or downtrend. And I don't know about you guys, but I'm a very visual learner, so let's go over some examples before we go any further. Now, this is the daily chart. One thing about trend lines that I want you guys to at least start with is a larger point of view chart, like a daily, 4-hour, or 1-hour. And that is because it's really important to use trends to determine an overall larger trend with your market analysis. Before you ever zoom into a smaller timeline, the larger point of view is really, really key. So we're gonna start on the daily here, and all you're looking for is to connect as many points as possible to draw your trend line. So we'll start back here, and then you can kind of just move your trend to follow as many touch points as possible. So at one point we had an uptrend here, but you can see we broke it, so now we need to track these two touch points, so we're gonna adjust it. And you also need to adjust your trends as price is developing. Now, I do want to pause really quick and say, I am a big fan of layering when it comes to creating a solid trading system and strategy. Trend lines are a very small part of my trading strategy. So for example, if you were looking to just use trend lines to take this trade, you could do that. But for me personally, my strategy would incorporate other things like KPLs, drawing key levels, potentially a support or resistance level. There are other factors, market structure, macroeconomics, that I take into consideration before taking a trade. Time of day, the list goes on. So don't stop here. Trading is a long learning journey, but again, this is still a great way to start. And this is the beginner foundational concepts that every trader really should know, is trend and how to track it. So this is where my trend line would land. And trend lines can be very subjective, meaning I might have my trend line here, somebody else might have their trend line here. For me, I try to connect as many points as possible, okay, wick or candle body, it really doesn't matter, to me at least, because again, this is not the only thing I'm using, it's just part of my strategy. Now, some people might move it up here, you know, me, I'm gonna keep it right in this area. That's a good trend line. Now, if we're branching off trend lines, which again, I'm a fan of, you need to track trend as it's progressing. So if you connect this low and then this point right here, now we have a new trend. And I'm gonna put it here because I wanna include this wick as well. So these are two trend lines that I would start with on gold, which is what we're doing analysis on the daily chart right now. Now this would be considered an uptrend. Why is that? Because you have a swing high, a swing low, swing high, I would consider that still the swing high, swing low, swing high, swing low. And these lows are higher lows, meaning we are in an overall uptrend on gold, and we have been for some time. Now, you can branch off, like I said, you can get really aggressive with branching off. So another area of interest for me would be right in here, because we do have a sharper uptrend to track. So if you go here, here, you can see we broke this uptrend, came back down, had a swing high, but that swing high was lower than this one. And then we started to make lower highs back to these larger trend lines. So again, all trend lines are connecting the dots. The dots are usually your points of swing highs or swing lows. And again, this is just gonna take repetition, but it's usually really easy to find them once you just understand, you're connecting as many points of interest, and you really want to try to do this and start on that larger point of view chart before you ever want to work your way in. So now you're probably thinking to yourself, okay, that's awesome. How do I actually use these trend lines though? How do I take a trade off of them? Now, I like to now move into smaller time frames. All of this is irrelevant, so we will currently just go to where we are right now on the chart. And right now on the chart, zooming in here on gold, we are retesting this trend line. And what I like to do is look at reactions at this trend line. Now this is where layering comes in. I do have an entirely separate YouTube video on how to read candlestick reactions. I will try to link that up here if I remember. If not, you can just go look at my channel, my candlestick course. But this right here, this wick off, do you see these wicks off that trend line? That is saying that buyers are right there pushing the candle up, and therefore that is a bullish reaction. Now, if you see something like this, going back to this previous example of a trend break, do you see how once we broke, we were no longer seeing support hold that trend, we were now seeing resistance, aka wicks on top, and we started to have lower highs on these candle wicks, therefore we continued down. Now, it's really important to pay attention to the reactions you're seeing at trend, and on a larger time frame that is easier to see. Now, when we start to move lower, you will see, we'll go to a 4-hour and we'll zoom into relevant price action right now. So you're gonna have more trends as you zoom in. That's why I want y'all to start on a higher time frame so you don't get too overwhelmed. We can actually go back and use this as an example. So I drew this on a higher time frame, right, that daily, but when we move into the 4-hour, that trend line really doesn't look very good to me. So I always go into smaller time frames and adjust the trend line to look cleaner, aka connect more points of interest for me. So I'm gonna move this downtrend over to right in here. And you can see, based on the 4-hour, we attempted to break this trend line right here. But the candle body closed over and we had a long wick on the bottom, hence still a very bullish reaction. So if you're looking to go short off of a trend breaking, that is part of a strategy you can use with trend lines, is when we are starting to break this trend, like an uptrend, you can look to go short. And if we're starting to break a downtrend, you can look to go long. Now, again, please make sure you are layering this with other things. There are a lot of fake outs happening with trend lines, and it is really difficult to trade from a larger point of view 4-hour chart if you are trying to do something like, let's say, be more of a heavy day trader. Maybe you're trying to trade prop firms, or you have a smaller account so you can't really swing trade. So trading off larger time frames like a 4-hour and a 1-day can be difficult for most beginner traders. But it's still analysis you need to take in before you go to smaller time frames to take trades. So this would have been a fake out on a downtrend break, and now we're continuing higher, but this candle finally closed below this uptrend, signaling that we are now in a downtrend, aka a good point to look to go short. Okay, let's go over another example, but this time we'll look for a long example. So as you can see, we made our way all the way back down to these larger uptrends. So once a larger uptrend is tested, if we get a bullish reaction, you then want to look for potential long entries. You can do that via looking for a downtrend break. Now this will be a great example. Again, we're on that 4-hour chart. I do really like 4-hour for market analysis, drawing trend lines, and then I'll go into the 1-hour after I perfect my trend lines on the 4-hour. But the 4-hour is a really good middle point between being too wide and too broad with the daily. You get more data, but not too much data versus a 1-hour. So the downtrend here, you're gonna connect this point and you're gonna connect as many points as possible on the way down. And this is a perfect example because now I'm gonna turn this red. We can go over what happened here, which is a way to seek confirmation. Confirmation is, let's say that we're breaking trend and you're unsure if we're fully gonna break because maybe a candle hasn't closed, or we're breaking trend, and in this case, we're already up significantly from that bottom trend line test. So you can look for something like a back test of that trend break for confirmation. This is a perfect example. So you can see that we had a bounce off of this bottom trend line. We moved up. We broke this downtrend and then we back tested. We held this downtrend break. And then since then, you would have been looking for longs as long as this downtrend break held and this bottom green trend line held as well. You'd be looking for long entries. And you can see we did that and some. So we went all the way back up to that prior resistance selling point. So it's not super complicated. And again, I think trend lines are a great thing to add into your toolbox when learning how to trade. I think a lot of traders give trend lines a bunch of crap, but mainly because they're using them on smaller time frames, not larger time frames. Also because that's the only thing they might be using and they're failing. Again, mostly on smaller time frames. And lastly, we can move into something like a 5-minute. Now, 5-minute is personally where I do a lot of my execution for my trades, and I know a lot of other traders do as well. When you work your way into a 5-minute, you just want to be very careful and make sure you're still considering that larger point of view trend over everything else. Now, this right here, this type of price action, you can still get clean trends off of. But you want to be careful moving your trends too sharp, okay? I think it's still important to always branch off and track the trends as they're progressing. But again, when you get into smaller time frames, you're going to have way more noise, meaning it's more likely you're going to see something like a fake trend break. So overall, very simple. You're looking for your uptrends to be your support, aka looking for longs if we hold. You're looking for your downtrends to be resistance, aka looking for shorts if we continue to reject. That's more continuation trades. Or you can look for reversals and trend breaks, which is one of my personal favorites. But again, please make sure you're pairing this with other things and other confluences so you can up your edge even more. That's a wrap for today's lesson on how to use trend lines as a basic trading strategy. If you guys like this content, make sure to subscribe. I try to post as much free content on YouTube as possible. I am a new mom, so go easy on me. It's really hard for me to get back on YouTube recently. But with that being said, I also have the Peachy Investor community, which includes all of my strategies, all courses over 10, A to Z are included in the membership. You also get Discord access. I have a Peachy support team and we do daily and weekly market analysis. I show you guys how I find my KPLs, my key levels. My trading strategy is explained in depth. We have courses going from beginner, you know absolutely nothing between tech and terminology, to very advanced, going over advanced charting and trading strategies, scalping strategies, and so much more. So if you guys are interested, check out the link down below in the description box. But if not, stay tuned for the next free video that I will hopefully be dropping in the next week or two. I'll see you guys next time.